Welcome to Trading Lounge and the Bitcoin report for Saturday the 25th of September. On the crypto index, which is the top 10 crypto indexes, obviously weighted heavily between Ethereum and Bitcoin. Now, we have seen the market fall out of bed, so to speak, from a move down, but on the crypto index, he was still looking at wave 1 with an A and a B and a C here for wave 2. And last time I spoke, we had this blue wave 1 here, so I've just changed that to green wave 1, because if we're going from wave 1 to 2 here and going up to 3 here, we're going to be going up a lot further, so that would be the right thing to do. So we're still on track here, even though we've had a deep correction here. So I'll leave all the news telling and fundamentals to other folks, but as a wave 2, it's nice and sharp here. Obviously at this point we don't want to see the market drop below this low here for the crypto index, Bitcoin or Ethereum. That's the catch-22 for all of this. Otherwise we'll look to move up to wave 3, 4 and 5 here with an ABC pattern here, and then moving higher in that point. So we'll take a closer look at this particular drop here and the rally with Bitcoin and Ethereum. Alrighty, so that's the general picture that we're looking at. However, when we go to Bitcoin first up, we're going to be looking at the bearish count, as we always do. So with Bitcoin here on the bearish count, we know that we've got 1, 2, 3, 4, 5 here for the A wave, then the A, the B, and the C for the B wave here. Down for 1 here, back for 2 here, down for 1 here, and back at the just move that across a little bit, back at the 50-60% retracement level there, which we sort of looking roughly around the 45. We always gravitate to the closest largest number, and in this instance we would be looking for that, looking at this as wave 1 down here and sitting wave 2 back on top here, and then looking at wave 3 to the downside and 4 and 5 down for wave 3, 4 and 5 for wave C at that case. So let's move into the more bullish count. Now we'll get to the details of all of this in a moment. So with our bullish count here, as you know, we're looking at this as wave 4 and this is wave 1 with an A and a B and a C for wave 2, and then if all going according to plan, then we'll go up into wave 3 over here for that. So it's all about this move within here, so we need to drill into that and take a closer look and have some understanding with that. So at this stage, once again, last time we spoke, I had this as blue wave 1, so I'm just making it green wave 1, and would be looking for 5 waves up here. Don't hold me account to these prices up here, but we're just trying to establish 1, 2, 3, 4 and 5 up here. Now wave 2s normally come in quite sharp, and they can normally come into the 50-60% retracement level. Obviously it was some hardcore news, so it's affected the market quite quite deeply, but technically speaking we can leave it as wave 2 here until this low here is breached. All right, that would be technically speaking. So in this case, looking at the intraday here, we could also say that we could also be short below this low here, even though it's technically not correct, but any move deeper than that, I would imagine that we would be on the downside at that stage. Now we could take the top here, let's just do that, just roughly speaking, and the low here, and you've probably done this already, and we can look at the 50-60% retracement level from here, because if it was going to fail, then that's where it's going to fail from. It can, so over here we've got 40, which is the major level, then 1, 2 and 3 that called minor levels that make up minor group 1, and if we can establish a support on here, then we'll go higher. If we can't do that, then we'll obviously go lower, but this is where it can fail from in this box. So it really all boils down to what is the structure to the upside here? What does that look like? And will we get support on top of 3 here? Now, in terms of 3 on top of group 1, in terms of 43, we're looking for a classic trading levels pattern. So the arrival, the reaction, the first high above the level, some sort of correction, and then gaining support over here. So it is a process and it does take time. And if we just consider that the 43, which is a minor level, but also the top of group 1, we could have a variation on that. The variation would be that it doesn't drop below the level. And thirdly, I'll just bring it in, is the overshoot pattern where it doesn't stop here. So if you see a market that doesn't stop at a level, then give it a bit of chance up into group 1. So if this is well, the next degree smaller here, so we could look at 43,300. So if it doesn't get support on 300 up here and then folds down, but most of the time the market will react here. But if it doesn't, you just got to kind of give it a little bit more time. But they're the 3 patterns in a nutshell. There's slight variations of all of those. It's not a perfect world, unfortunately, but we can see that we've just arrived here in this instance, so we can start to drill into the 1 hour chart here, and we can see that we've had, well, this was our 50-60% retracement level here. And if we put in our levels here, let's just do that just a bit roughly, but when you're working with a level, you really want to make sure that you nail that number down quite well. So what we could say here, we've just arrived here. This big box here was our 50-60% retracement level coming down. This was our box going up. This is our box going down. We've breached that and we've come through pretty swiftly here. So we could say, it's a bit of an even bet of what could occur at these points here. That sharp move down, is a little bit scary in that regard. So we'll need to be mindful of that. And that's our 50-60% retracement level. So it really boils down to the 43 here being the support or not the support. I could also say too that the number 2 here is really quite important as well. Once the market's been trading above the number 3, the 43 in this case, it can come back to the 42. In fact, it can come back to 41.50 as it does sometimes. But even if it does, we don't want to see the 42 as the resistance, as a retested resistance. So that could be nice and clean like this if that was the 42 there, because it can spike below it. Normally comes down to the halfway mark between 1 and 2, so 1.5. If it finds it as resistance and then breaks on a low here, then you know that it's going to be pulled down to the closest largest number. And it can get a bit more messy than this when it comes down and bounces off 2, it'll come through. It can come back up here, which it normally does, and it's the most common pattern. So still, it's all about that low there and the second low. And if it comes down again, well, then you've got to work the levels over this side. So in a nutshell, we don't want the number 2 to become the resistance. It's okay to spike down through here to there, but we don't want it becoming the resistance at that point. If that's going to occur, it comes down and pushes through it again, then it's going to be pulled down to the closest largest number at that stage. And if that's the case, then you would need to be short at that point, because it would be that the number 2 as resistance would be it's the first. The number 2 is the first within group 1. Here's the first sign of it becoming bearish at this point. Now that it's traded back above the level there, a little bit complicated, and you'd be looking for short trades on this side of the 40 at that point. But that said and done, we still need to just work out here. So if this market had come down and taken the low out here, then we would have a confirmed bullish, bearish move at that point, and that would make this here as wave 1 here, over for wave 2, down for wave 1, back for wave 2, down for wave 1, back for wave 2, and then down for 3. So this move down here would be the third of a third of a third wave here. So there would be a really hardcore move down through this point at that time. So it'll be the third of the third. So it'll come down hard and fast. Okay. But that number 2 there as resistance would be the first warning sign of that. That would be the first flag. You know, if you would, you know, it's hard to, you know, I can say something like this, but unless you've had experience of this event occurring here, would you take action on that? Well, probably not. You would probably wait for this one. But all I can do is point it out to you, and after a while, the pennies will start to drop. You'd also get a classic trading levels pattern at the 40, so you could expect a bounce and then go through. So once you know that pattern, then it becomes, you know, I'll just bring it back here again. Once you know this pattern, if this is the 40 here, if the market comes down here, well, you know it's going to, now you know, you've been told, you know, it will bounce, but then it will go through and then it will do this. So if you understand this, it will save you a lot of emotional turmoil, because, you know, you'll see it bounce and go up and you'll think to yourself, well, are we safe now, you know? But if you know that the bounce is just normal process of it going further down, then, you know, you can take action, and eventually you know exactly what point that you would need to, you know, be on that side of it. You know, it helps sort things out a little bit. Okay, so that's the bearish side. Okay, on the bullish side, as I mentioned, we need the 43 as the support. Now, I think there's a better case for Ethereum rather than Bitcoin. We're going to go to the tick chart now and have a little look at this. So let's just bring in some more data. How much do we need? Not that much. So this is what we've got so far. So realistically, the move off the low here could be counted as, you know, an A and a B and a C for the A wave, and then the B wave, and then the C wave here. Or it could be counted as 1 and 2 and 1 and 2. There's different scenarios for that. You know, we could look at you know, not worry about this too much, because it's sort of, there's nothing I can really say or do about that. I could call it anything I wanted to, you know, an A and a B or 1 and 2. But this one in here, this all makes it a little bit sort of interesting here, because in this case, if we, let's just start with this, and so we can get a bit of an idea. If we look at this as 1 and 2 in here, and because we could do that because it's in 3 waves here, so this will be up for 1 and ABC here. So then we could put over here, we could put just building a case for all of this, just joining the little dots together, and then smaller moves we could look at within this space. We could, and we'll come back to this too, because I think from when I was looking this morning, Ethereum had a better count here for all of this. But at the same time, we could see 1, 2, 3, 4, 5 there, so we could go 1 and 2 there. And we put this 2 here. Now this looks like a nice third wave here. This is a bit small for a third wave here, so that's probably not the case. So we'll put that up there, and then we could also just come down another degree. Just I think it's okay for us to, you know, for you to come along and on the ride while we do this here. I mean, in a perfect world would have all this done, but I think that it's good to see the chef cooking, so to speak, you know. Adds a bit more flavour to the event. So from here we've got 1, 2, 3, 4, 5. So we're kind of like going up there for the third wave and the fourth wave. So I have to say it's kind of looking a little bit bullish, isn't it? In that, you know, when we're looking at it like that, wave 4 can pull back to the wave 4 of 1 lesser degree, and that's probably a little wave 4 in there. So we'll do that. We'll bring that back, and then we'll have this wave 5 up there, which would make this wave 3, and then there'll be this wave 4, and then this one. Oh well, that still needs wave 5 to that point, doesn't it? So then we'll need that wave 4. So there's a little bit going on here. So you can see that would probably be, you know, based on this, we're going to be pushing above. This was just the trade setup here as a classic trading levels pattern. The arrival, the reaction, first high above the level, the A, the B, and the C, as you probably would have seen it. We would have put this up here, we popped that down there, we put that down here, and that's where you can go long from at that point. So that's what I've done. So I'm just going to put in my little dollar sign there. That's just to let me know that I could just put that over there. I've only picked up $5,000 worth there, and I'll pick up another 5 tomorrow because my plan was to put 10 in. But I want to make sure that I've got it here, do you know? That's what I want. So anyway, I just want to have a look at Ethereum for a moment. So same picture, wave 1 up here, and ABC for wave 2. You know, we're trying to confirm this, so we'll just move into, I'm not sure what other charts I've updated here. I would have done the same thing too here. I would have had this as blue, but I put it as green. But apart from that, there's no change. So we're looking at this as 1 and 2. Now, while that low stays in place, that's okay. We can do that. And yes, it is rather sharp and scary and all the rest of it. Indicators will be looking good because they haven't breached. So we've got those, you know, all the indicators will be, you know, they're just really repeating what's going on in the chart anyway, really. So anyway, enough waffling. Let's just move on a little bit. So there's 1 and 2 there. It's also dropped a little bit below there, 61.8%. But apart from that, so in this case, what we could do to say, well, let's just check on a few things first. Let's just make that a little bit bigger. So it's just good to start from, we could say, the top down in a way, couldn't we? So what we could do here is, that's really nice that that's on the 61.8% there, because what we could say here is that if the market's going to fail, it's going to fail from here, isn't it? That's what it's going to do. But if we can get some sort of support on this level with a classic trading levels pattern, then we'll be Bob's your uncle, whoever Bob was, mum. So that would be the long trade at that point. And the short trade would be wait for 3 waves from the, once you got the top in, wait for 3 waves down, and then you can look to be on the short side at that point. Because anything more than that, you'd be on the bearish side at that point. Anyway, that 3 waves there, because that would be corrective at that point. But I want to go into the tick chart here and just sort of understand this a little bit more. So let's maybe 5's enough. Yeah, it's very much the same as Bitcoin. So here we can see from the low here we've got 1, 2, 3, 4, 5. So that's quite nice, isn't it? Then an ABC here. So we'll just assume that this is 5 waves up here. But once again, you know, we could look at this in different ways. We could look at this as wave 1 and 2 and 1 and 2. We could probably look at it as wave 4, but it's pulled back a little bit sharp for wave 4. And the key here, I think, is that this little guy here is in 3 waves, not 5 waves. So that's not, so we can't go an A wave, a B wave, and a C wave here. So that's not the thing there. So this is 1 and 2, and this is 1 and 2, and this is 3. So we're in a building process here. So we're going to be, you know, we're still just going to be building to the upside here on all of this. You know, there's going to be resistance at this level here, but yeah, we just need to look at that. So we could put that here. We could put that there. Let's just say that we're in the 3rd wave here, and there'll be a 4th and a 5th, and let's just call that, we've already called that this. Oh, I've got to change that, don't I? So anyway, that's going to be green wave 1 at that point. Anyway, it doesn't really matter for this thing. So what we can do here is just start building this as well. So we were on the right track, you know, on the Thursday and the Friday, everything was going along quite nicely, and then some news came and upset everything, and but it hasn't totally destroyed what we'd been building. We were expecting a wave 2, but the thing is that it was just a little bit sharp, you know. That's the main thing. So yeah, but we still got to be careful that we don't fail here, even though I'm building a bullish case, you know, because we don't know that yet. We don't have all the evidence in here yet. Okay, so that's what we need to just continue building. That's what I'm doing just here. I mean, it certainly can be an ABC for the A wave here and the B wave here and then 5 waves up for the C wave here. And then that's the end of it. So, yeah, we still need to be careful, you know. This will be 3 waves up here, so we could just draw that out. That's going to be 1 and 2 and 3, 4 and 5 for that 3rd wave there. And then we're going to have in the little 4th wave there. We can move these guys out. But the point of doing this is really just to sort of show and explain in a way. And when I do this and come back in hindsight, it looks like I was drunk, or, you know, I don't know if you've seen spiders that have been intoxicated with marijuana or LSD. It's quite funny how they sort of do their web at that point. So yeah, and you come back and look at this and you think, my God, I mean, as you do it now, you think, oh, that's really good, Pete, you know. But then when you sort of come back and look at it, it's like, my God, you know, I thought you're supposed to be professional, you know. So yeah, so it's going to be a little bit of, we're going to be in 3s and 4s here, so it's going to be a little bit tricky. But what we're trying to do is, at the end of the day, is two things here. We know that we should just put that in. We know that from the top to the bottom here, we know that the 50-60% retracement level is right across here. So that's where the market can fail from and move down from here. But otherwise, if it's going to build a case to the upside, then too many objects. So even when we get this wave 5 here, we don't need all of these. I don't need that. You got the idea there. So when we get over to this point here, there's still going to be an A and a B and a C wave coming back. So what you'll need to do is take that low to that high, wherever that may be. I'll just put it on 100 there, because 1's the strongest number. And that means that we'll need to be aware of this pricing down through here. So this support over here, we don't want that really to become we don't want 28.50 becoming the retested resistance at that point, because it'll probably be bearish at that point. So even though I'm building a case for the upside here, yeah, we're not quite sure just yet. But as soon as over the weekend, if you can see support on this number, nice solid support, and the market's up here, then you've got a pretty good idea what's happening, right? You'll be bullish at that point. So that's really all all this is about. This is the takeaway of that. At least you know from this video, all is not lost to the bears. And yeah, but it still could be. At least you know what we're kind of looking at, really. And that's the same for coming back over to Bitcoin here now as well. As you know, we can look at this as an A wave and a B wave and a C wave for the A wave and then the B wave, or we can look at it as 1 and 2 and 1 and 2. So there's different cases for this, but I can see that we need to, whichever way the cookie crumbles, we still need to build higher here to finish off. And just hopefully that we will be above the 61.8% mark at some point, you know. Alrighty, I'll leave it all at that. So let's just recap this here a little bit on the hourly chart, just to gain some perspective here. So we're still on track with our wave 2 low in here. It's just that we've got wave 1 and 2 here now. And in this case for Bitcoin, the market can trade above the 43,000 to the 43,300 or 500. Yeah, you just need to watch how it builds here. What we can say, if the 42 it can trade below the 42, but if it becomes the resistance and does this, then you know that and it'll look bearish at that point, you know what I mean? So it will be over at that point and will be coming down, and we would have to look at this in reverse as down for 1 here, back for 2, down for 3 and 4 and 5. So we'll be coming back to our our bearish count here in this regard. And so in a nutshell, we can say that being short under here and then under here would be the logical thing to do, because when you look at this sort of logically as well on the bearish side, I mean, if we can just go to, this is a monthly picture here. There's 2 months actually. So you can see that even though we've had a good trend, we're still like, the market has corrected and it can still come down. If it builds up, well, that's fine. But we've got a case for both sides. But when you're looking at this on the monthly, that's really on 2 months. So let's just grab a month. Here's a month here. So you can still see, in a way, this is all about the 50,000. It's all about trading level 5. This is what this correction is all about. And when we normally get to a level, there's always a good few swings about it. Will it leave here? Will it find support? I mean, for me to turn bullish and say to everybody that the bullish trend has resumed and I've got confidence in that, I would need that 50,000 as the support. So under that, we're part of the guessing game, and yeah, it can still fail. I mean, as a rejection of that, it would need to take that low out as a rejection. It hasn't done that, so it's just sort of still in a rock and a hard place. But yeah, so it's just a bit of a guessing game. If it found support on this level, the 50,000, then obviously we'd be up at that point. But just wanted to show you the monthly chart here, because we're still quite high up with all of this. It could quite easily come back further, as an A wave, a B wave, and a C wave back here. So we're still on thin ice with all of this. But obviously, the bigger picture is bullish, because this is just like a penny stock. You go back and have a look at the penny stocks, all these loops to the upside, they're always the same. And at the end of the day, technology always wins out, and the blockchain, even though it's been around for a lot longer than people actually think, is just starting to wake up now, and as things get built on it, it's just the new world, isn't it? It's the brave new world, and it will win out, and in the end the 50,000 will look quite cheap, but it's only those that can hang on and hold through all these types of corrections will see the wealth. Alrighty, cheers.